Hello and welcome to Asia Business Report with me, Arunoday Mukharji. We begin in the US, where the federal government has avoided a partial shutdown. Both the House and Senate have agreed on a spending bill for 45 days. Now, it's meant to give politicians more time to agree on a deal to fund the government through the 30th of September 2024. Republican House Speaker Kevin McCarthy submitted the legislation in defiance of hardliners in his own party who say they will try to derail the process. President Joe Biden had urged all members of Congress to do what it takes to avoid a government shutdown.
But folks, the truth is we shouldn't be here in the first place. We shouldn't have gotten here in the first place. It's time to end governing by crisis and keep your word when you give it in the Congress. A few months ago, after a long negotiation between myself and the Republican Speaker of the House of Representatives, we came to agree on a budget agreement precisely to avoid a manufactured crisis that we just witnessed. But the last few days and weeks, extreme MAGA Republicans tried to walk away from that deal, voting for deep, drastic spending cuts from 30 to 80% that would have been devastating for millions of Americans. They failed again. And we stopped them. But I'm under no illusions that they'll be back again.
All right, so how will this latest news of Washington impact global markets? I'm now joined by Peter McGuire. Peter, always good to have you back on Asia Business Report. Thanks very much for your time. Well, it is a temporary reprieve, as we've been calling it. There are still lots of issues left to iron out. Is the possibility of a shutdown still a lingering and a worrying factor?
Well, I think, good morning, and I think it is. You know, we've got 45 days. It's kicking the can down the road. I feel as though that'll be relatively positive as far as market sentiment over the next, this trading week and certainly into the next couple of weeks. So overall, it's a short-term reprieve, and we'll just have to see where it is in 45 days. Peter, ratings agencies say that a shutdown will hurt U.S. credit rating. What message really is all of this sending out to foreign governments? Well, it puts a level of fear, and that's I think every government needs to be conscious of. And if that's the case, then that would be negative market sentiment, and that in turn can create sell-off pressures and how it's interpreted from not only the retail but certainly from sovereign wealth and from governments globally.
Peter, how would you say in terms of the U.S. economy is doing in terms of a comparison with other economies, say Europe or even China, which we know is flagging? How is the U.S. economy being viewed by investors?
Well, it's been very, very strong over the first 8 months of the year. September gave up a little bit of that hot steam, but overall, employment's strong, consumer confidence is relatively strong. And this fourth quarter will be interesting with earnings and naturally rolling into Christmas. So at the moment, I'm saying it's relatively bullish, but we've just got to see where that runs.
All right, Peter, we'll leave it there then. Thank you very much for joining us with your inputs.